Hello everyone, my name is Marcello Kolax and today we're going to have a look at European energy markets for the week starting 14th of August 2023. Well, that was a week. Quite exciting on the European gas market. What the TTF did was quite exciting, and I can see that quite a few traders were probably caught with their pens down, so they had to cover their shorts. So what did happen? Let's zoom out to get a little bit of an overview to see where we are, where we've been. So zooming out, I'm always starting my weekly comments with the same broader outlook, so that's never going to change. Of course, we started in June 2020, we moved all the way up, and we have been since August 2022 in our descending channel. And this descending channel, from a fundamental perspective, has been informed by Europe being able to secure LNG supply consistently. Europe showed that they are willing and able to reduce demand artificially to make it through the winter, and storage sites are sufficiently full. So all of this fundamental news has pushed the market lower and lower and lower. And just last week, when was it? On the 9th of August, we get some news that there's some potential strike happening in the LNG industry in Australia. So, and that sent a shockwave through the markets, with people now believing that maybe one of the main reasons for the price to go lower, Europe being able to secure LNG, is now evaporating. Well, there's not a lot of LNG going to Europe from Australia directly, but it would significantly reduce the LNG that's available globally. So with this reason gone, the market pushed a little bit higher, and we did move above the, at first we did move above the triangle that has been shaping the market since early June. And after we made our first higher high, so we pushed above this high at 34.35, and then of course we pushed above the descending trend channel. That triggered a lot of short covering. So we did see a lot of volume going through on that day. And when this happened, I said we have to be careful to understand if this is really motivated by bullish sentiment, or if it's really just people trying to cover their shorts. Now the market is coming down again. This was to be expected, and how far it will go lower, we'll discuss it in just a second. So if you have been following me actively on LinkedIn, or if you're part of my WhatsApp group, then hopefully this wasn't all too much of a shocker for you, because a couple of weeks ago I suspected or identified that the evidence is pointing to eventual upside resolution. Of course, there's a difference between trading and analyzing. So if I say the chances are higher that the market will resolve higher, I still haven't given any sort of clear indication of what might be recommended. But some traders might, as a response to that, take off their shorts, or at least go neutral. That would have been an idea. Then I have previously identified, as soon as we start breaking above the triangle, then at least we should close out any short positions. And if we start breaking above this previous high, then there would be an opportunity to go long to at least this level, 41. So if you got in it between 34.35 to 41, that wouldn't have been all too bad, wouldn't it? Okay, cool. So now the question is, what is this? What is this? What we see, zooming out, we do see that a lot of, so by the way, I always leave on the old markings from last week so I can update them. So I only like to, apologies, I only like to put in levels that are actually relevant. So which are the most relevant support levels now? Well, it is obviously this trough here, so that's an important support level. Then we have this one here, and all the way out here, at this point you're just putting on At this point, you're just putting on too many lines, which can get confusing. I like to keep it at 3. So I'm just putting these support levels on. And we call this support 2, because that is the second most important level of support. And then we have support 3. But now the question is, where's support 1? Well, what I would like to see in order for the market to continue moving higher, I would like to see a continuation of higher highs and higher lows. And we get that by, you can see higher highs, higher lows, it's happening, and now we are making our a little bit of a correction lower. How far can this go? But we'll talk about that in a second. Ultimately, I believe that if we maintain higher highs and higher lows, we could very easily see the 57 be hit, which is the 200-day exponential moving average. I would like to consult Fibonacci extensions for this. I'm putting it right up here and putting it all the way down here. So if we were to retrace all the way until here, we would undo the entire preceding up leg, right? So now we are tracing lower. So this is the up leg. We are retracing 23.6%, 38.2, 50, 61.8. So any old, good, solid retracement can go lower to the 61.8. That is nothing crazy. That is to be expected. So, is there any other sort of support level in the area? Maybe this bunched area here, yeah, a little bit higher. This old resistance could turn into support, but I wouldn't be all too surprised if we do find some support between 32 and 34. Anything below that, I would be wondering if we're even continuing with any of this. So I would say up until here is acceptable. If we start seeing some sort of bullish signs, which could be in form of an oscillator giving a bullish signal, I would probably look at those, yeah. Volume maybe slowing down on the down leg. Yeah, if somewhere in this area, maybe a bullish reversal candle, who knows what could happen, yeah. But I want to see some evidence that the market is likely to bounce, and then we could make it at least until here in this area again, in the 40s, before we make it to 57. Or maybe even, what is this peak here? This is high 50, yeah, I would say 50, and then 57 thereafter. So here once again, I'm not trying to pretend that I know what is going to happen. Nobody does. But we can with great certainty say when the uptrend is most likely to continue and when it is most likely to end. So I would like to watch 32, 34 for potential evidence of support before we continue higher. Of course, the exact same applies to Brent, to the NBP, the British hub. Here, of course, we are still within the channel, but the TTF is usually leading the charge here, and essentially more or less exactly the same thing is happening here. We start making higher highs, higher lows. Now we're coming down maybe to the 62% FIB retracement before we make an approach to this area near 127, 131, that sort of thing. Okay, let's have a quick look at Brent. Brent is quite interesting, so I leave on my old markings, and I have to say, no wait, let's zoom out first. So we all know what's going on. So we did have our long uptrend that goes all the way back. Oh, what is this? April 2022. We peaked in June 2022, been going down for a little bit, and all of this year we have been moving in a sideways trend, which has then shifted lower for a couple of months, and now we're breaking higher and higher. So on the weekly chart, we can see, oh, this is a little bit of a reversal candle. Maybe I would even call this not quite a hammer, but maybe a hammer. So if we start seeing a reversal candle near some good resistance, I like to consult my oscillators. I like to choose the stochastic, and we do get a good bearish signal up here. And if we would be moving below overbought territory, so which is here, then we would get an even firmer signal of impending bearishness. So now the question is this going to be a little bit of a retracement before we move higher, or is it going to undo all of this? Well, once again, we'll consult Fibonacci retracement levels in a second. Let's zoom in. So there's some potential for the market. Looks a little bit toppy for now, but ultimately the idea is still to move higher. Why am I still fairly bullish on this? Because we just got a bullish signal on the MACD, and it is happening at a sustainable pace. This has been a bit ambitious, but overall this doesn't seem too crazy. Let's move in. Wait, let's have a quick look at volume as well. Can you see how stable the volume is even as we start approaching this resistance area? So it's looking kind of good for the bulls, I believe. Nothing too out of the ordinary. So I've had a conversation, very interesting conversation earlier today with a trader who was also wondering if maybe like in the 87 area, it's a thick resistance area. Can you see going all the way back to November 2022, and it held once, twice. Third time, fourth time, fifth, sixth, seventh time. Now we are hitting it for an eighth time. And now the question is now the time for the market to move higher? Well, we're definitely going to get quite a few stops triggered, probably. So there's probably going to be some profit taking. So I wouldn't be surprised if we move a little bit lower. We also see that on the MACD that is slowly started to hinge. We are not as confident anymore. You can see that at the histogram as well. The histogram is the difference between these two lines, and it's a visualization. So it's not new information, it's just making this information more easily to see. We can see that these two have been narrowing. We might be getting a preliminary bearish signal here at some point, but do not forecast the forecasting tools. I believe that we could push a little bit lower. Obviously, I do see that this old resistance level could now turn into support. It held only once. Maybe we'll try this a second time. It is this old peak from the 14th of July, but it is also near the 200-day exponential moving average. So I think, with all the information that's given to us, momentum slowing a little bit, hitting good resistance. We got a bearish harami, which is these two candles here, which are smaller red body is contained within a larger green body. So I would say, yeah, we're due at the start of this week for a little bit of a correction. Let's have a look if Fibonacci retracement levels would give us any more evidence of where a resistance might be. So I would where can we put it? How about this? Because this here I would consider one up leg, yeah? This is one, correction. This is one, correction. There's an argument to be made to go up leg, correction, up leg. So we'll have a quick look at both. All right. So do you remember where I said 61.8% is usually the retracement area? What a surprise. Okay, it's not a surprise. Of course I did check. So it is this old resistance that turned into support. It is the 200-day exponential moving average, and it is a 61.8 retracement. So when all those levels come together, that means different traders on different time frames with different strategies and risk appetites and favorite tools, everyone is now looking at the same kind of level, the 82 area. So that means there's a greater chance of people trying to take advantage of this before we start to move higher again. So yeah, I do believe we could go all the way down here. Okay, let's see what would have happened if I take this and I take, let's say, yeah, this here as a resistance. Oh, let's change the color. This is not nice. Give me 1 second. No, what I'll do is I'll remove the other one. How about that? This, and now we do it again. So maybe another trader says, no, Marcello, this here is the real. I'm taking this as an up leg and correction, and now I'm taking this as an up leg and a correction. So this would go all the way. Yeah, that doesn't make any sense. Yeah, you know what? I'm changing my mind on the spot. This wouldn't make any sense because you were just retracing the entire thing. So cool. A little excursion in the mind of Marcello we had here. So I believe that the 82 area could easily be hit before we make another attempt. So, and as always, in order to stay accountable, I do draw on the next path for me. So we had this and this and this and this, and now probably all the way up down here before we make another attempt. Okay, what will happen here? Nobody knows. Could this turn into like a double top? I don't know. Or will we really push higher? I don't know. We'll just see. We'll take it one session at a time. So for now, I'm just putting it here with this here being the idea. There's a good option for it to hold. Make sense? Wonderful. All right, okay. Let's have a look at carbon. Okay, so you can see I always like to leave my old markings on for, yeah, to stay accountable. Let's have a look at the weekly chart. Okay, I noticed this and I want to actually adjust something. So we are here on the weekly chart. We are at this really, really long and thick uptrend that has been happening since forever, since 2017. We have retraced lower, but I would like to adjust my old drawing and make, I mean, it has always been clear. There's never been a doubt about this, but it never really put it on. So we do have this resistance area that is, I mean, very, very obvious for everyone. I'm not telling anything new here. At 100, right, has been hit. And what I would like to add now is also maybe a little bit of this action here. So we do have essentially an ascending triangle. So I did have it on at some point in the past and removed it again. But I do believe that this is reasonable. Okay, so we can see we've got a lot of support and resistance. A lot of stuff is going on here, which is not good for any traders. So I'll just remove a few things here to make it more easily digestible. So do take note of this ascending triangle, which is by textbook usually resolved to the upside. To the flat side, but not always. And it's also the first triangle of its type and magnitude on the EUAs. So let's see how that turns out. Let's zoom in. So you can see we're in this mid-term downtrend, and we've had some really pronounced legs. And if we have a leg ongoing, it usually maintains for a little bit. So I have correctly anticipated the move higher. Nicely done. We did break above this old support level, which we break through and now offered a little bit of resistance. That was the idea. Didn't quite hold, so we can just really remove that. We also moved above the 200-day exponential moving average, but this is irrelevant because we are in a little bit of a sideways range here, so we do not want to take any real signals from it, because don't use moving averages in a sideways trend, just generates false signals. So here, traditionally, I would like to go with the Fibonacci's and see how far we could go. So in all these Fibonacci retracement levels, they mean something. So we are trying to retrace this leg. And if we would have tapered out here in the 23.6 region, it would be just considered noise, and you probably continue. Now we moved to the 38 and even above that, which means, okay, we've got an actual correction going on. And we could very easily hit the 50 and the 61.8. That would all make sense. So let's have a look at what the tools are doing. So we did get a bullish signal on the stochastic, and we have still a long way to go before we even move into overbought territory. We do see that the MACD is moving closer together. So what does that mean? For now, it means an extended correction that could very easily go to the 61, I would say. Why do I pick 61? Why didn't I pick 50? Because I can see that there's still a long way to go before we move into overbought territory, and we are already above 38.2%, not halfway, but we are already nearing 50. So I would be very surprised if there wouldn't be more fuel in the tank. The only thing that's worrying me a little bit is the lower volume, but that also shows me that this is a correction to the underlying downtrend. So the only thing we are adjusting here is the extent of the correction for now. So I'm adjusting, I'm updating my, take all of this out, it's getting a little bit much. I'm updating my suggested path for EUAs, and I do believe that, okay, we came all the way down. Now we're experiencing a correction that might be between 50 and 61 0.8, so I'm just putting it right in the middle. And here in this area we would be looking, as for the other ones, for volume, reversal candles, maybe an oscillator signal, and then the idea is to move lower. Then next question is, okay, so where do we actually continue the downtrend? Well, we'll take this one day at a time, because for this you would have to move below here. And actually we are already at the support level that I have, or the target that I've identified a couple of weeks ago, months ago. Yeah, very long time ago I identified the 82, 80 area, because you can see we've got this long support line offering some support here. So I kept an eye on this. Yeah, it is a good target, I would say. Okay, cool. So let's see what happens. We are clearly correcting higher, but how high remains to be seen. So I put it up here, and then we'll probably go all the way down here or there. But let's see. Let's see what happens. For now, I go with this. Thank you very much. You've been amazing. I always enjoy the conversations I have after I publish my videos. So do follow me on LinkedIn if you're not doing so already. So my name is Marcello Kolax, and like this. And yeah, just connect with me, talk to me. Always good to exchange notes. I'm very active on there. Contact me for a WhatsApp group where I share my TTF views every single day. And hey, if you really find this useful, why not share this video from your LinkedIn post? Cool. Thank you very much, everyone. Have a good week ahead. Bye bye.